Hi guys, this is Phil Town and I'm the founder of Rule 1 Investing, and I want to review today a fabulous way that we built so you can figure out what you'll need for the retirement lifestyle that you want. What I did is I put together a spreadsheet on one hand, which is an Excel spreadsheet, and on the other hand a new online calculator, and both of these will help you find your number. The reason I did both of them is because a lot of people have trouble with Excel spreadsheets, and if you're not comfortable with Excel, it can be really confusing. So we did it so you can just go online and click in the right box and put in a couple of numbers and it'll tell you the same thing. The spreadsheet gives you a little more power, but that's all. So now, what's your number? Your number is the number of dollars that you're going to need to save for retirement. Now, there's some assumptions that you have to make in order to figure out just how big a pile your number is. And I'm going to help you go through the process of learning just exactly what those assumptions are and how you use this tool. So first, what I'm going to do is I'm going to show you what to expect if all you do is save money for retirement and invest it the way the financial services industry wants you to invest it. So I'm going to go on to the spreadsheet right here, and we'll start with the basic assumption that you want to live on a $50,000 a year lifestyle. So we're not going to dream up, living in paradise. It's just enough money to get by, see the kids once in a while, and have enough there. And we're going to do it so that we can see what it would take for us to do that for our whole life. So some of the assumptions we're going to make are that there's a rate of inflation. We're going to assume that it's 3%. Right now it's about 2%. But we're going to assume long term it's about what it's been for the last 100 years, which is a little over 3%. So we'll call it 3. We're going to assume right now you're about 45 years old. Now this is of course something you can change. You can just put in how many years before you're going to retire. So if you're 45, you might put in 20 years into that box. And then you're going to live a certain length of time in retirement. And we're going to assume you're healthy and you're going to live 30 years. Now some people are living 40. Some people are retiring younger and want to live and be retired for 50 years. So you put in a number here. That's your expectation of life after you retire. I'm going to put in 30 years here. Now, the next line you got to put in is how much money you have to invest now. That's the amount of money you have available to build on, and how much money you're going to save every year in a qualified tax plan, because we're not going to count taxes on the growth of this money. So we're going to assume that the money is not going to pay taxes while it's growing. Really important. So let's just assume for the maximum ease of this that we're talking about a Roth IRA, and we're going to start with, let's say, 20 years before we retire, 30 years in retirement, 3% is our inflation rate, and $50,000 a year is what we're going to spend in retirement. Now, what we're going to get is a return while we're working. And this, financial planners are going to put in different numbers here. Susie Orman would like you to believe that you're going to get 12% per year. I'm afraid that phenomenal investors like Bill Gross over at PIMCO think that you're going to be lower than 5% for the next, quite some time, because we've been in a real inflated environment and bonds are very, very low, so it's hard to make money on those. Stock market is kind of peaked, so it's hard to make money on that. But you're going to figure out over the next 20 years roughly what you'd make. And I'm going to put in 5% here. That's a good number. It's probably pretty solid. Takes into account a lot of bad markets, good markets, and so on. And you're going to be investing the money in, depending on how old you are and so on, but at 45, you're going to have some bond funds and you're going to have a lot of stock funds that can grow. Now, what that means is that when you are 65, you'll have a certain amount of money to retire on, and then you got to figure out how long that money will last. So if you're going to retire, let's say in the year 2036, which is 20 years from now, what would it take to live a $50,000 a year lifestyle? And here's where it starts to get kind of interesting, because if inflation is kicking in at 3% a year, that $50,000 lifestyle is going to cost more every year. And by the time you get out 20 years from now, that $50,000 lifestyle is going to cost you $90,306 a year. That gets pretty shocking to everybody. Okay, so at that point in time, you have a certain amount of money built up over a period of time, depending on how much you're starting with, how much you're putting in every year. And then you're going to invest it. And you got to figure out what's the rate of return during your retirement. And again, this is a you don't know how to invest, so this is a hands-off portfolio, 60% stocks, 40% bonds. Gradually, your financial advisor will shift that to more bonds, less stocks as you get older. And we're going to assume, excuse me, a 5% return during retirement. Now, it depends on how you want to look at this. You could assume that that's after tax if you want to. What's your inflation rate during retirement? 3%. And so then we're going to figure out how long that money will last in retirement, that you're growing at that rate of return with inflation continuing to raise the cost of living every year. So that's basically a fairly sophisticated view of what the real world will look like in about 20 years and then continuing on through 30 years of retirement. Now, let's start with some assumptions in this. Let's start with the idea that you've got $10,000 today and you're going to invest that and you're going to be able to save $5,500 a year in a Roth. Where would you be in 20 years? And the answer is you'll have $208,000. And at that point in time, it costs $90,000 a year to live on today's $50,000 of purchasing. And you are going to be able to live 3 years before you run out of money, which is kind of shocking. And so it turns out that in order for this financial structure to work for you, you will need to save an additional $1,814,000 over the next 20 years. So how can you do that if what you're making is 5%? Well, you can put away more and more money every year. So maybe let's figure out how much you could put away every year tax protected. And here we get into all kinds of problems because you're restricted from tax protected. Let's say you and your wife and you and your husband are putting in $11,000 a year, okay? So I'm going to change that number now from $5,500 to $11,000 a year into the Roth IRA. And by doing just that one little change, we have increased your retirement life to 5 years from 3 years. So if you put in twice as much money in a Roth IRA, you can then live 5 years in retirement, and then you only have 25 years of living in retirement with no money. So you're going to be short about 1.6 million. That's kind of distressing. So let's start with more money. Let's start with the average amount of money that a 45-year-old has today. I think it's roughly 87. Let's just call it $90,000, shall we? Let's say you've got $90,000 available to invest that you can use to build on. How long, if you're starting with $90,000, putting in $11,000 a year, will you be able to last in retirement with these basically reasonable assumptions? And the answer is you can make it 7 years now in retirement, starting with $90,000 today, putting in $11,000 a year. And you'll only have 23 years where you'll have no money. You're going to be short 1.4 million. This is the situation for so many people in this country right now. They listen to ads on TV about going to State Farm and other companies who are going to help you figure out how to retire. You remember those ads about the girl comes in and she's going to quit her job in 15 years and they're really cute and everything. But good Lord, the real numbers are stunning, you guys. So let me tell you why I put this in front of you, because it would be really distressing. This is why financial advisors don't use this kind of stuff, because they can't give you a program that promises or even implies any kind of significantly higher rate of return than that. I mean, they might talk about 7% and that'll help a bunch, but I don't know that any of them really feel confident they can get it over the next 15, 20 years with interest rates where they are right now. If they raise the interest rate on bonds, bond investments are going to go terribly. So it's a really difficult market right now. So what we do is we have the calculator available for you to explore with other ideas. So let's go back to this idea that we only have $90,000. We're 45 years old. We can only save $5,500 a year. Let's make it our husband and wife saving $11,000 together. So instead of making 5% a year, what if we made 15% a year? Then what happens, okay? Well, if we're making 15% a year while we're not retired, there's no reason we can't make it while we are retired. And if we were to do that, we have more money than we can spend at $50,000 a year in current dollars. In other words, we can spend that money at $90,000 a year, at $100,000 a year as inflation's going along, and we're never going to run out of money. In fact, when we die at 95 years old, we'll leave $563,000 to our kids. That's stunning, you guys. That's the difference between 5% and 15%. That's the difference between having knowledge and not having any information at all. So I want you to take a look at the difference of lifestyle that you can afford and start playing around with this tool set and put in the amount of money you have for capital right now, the amount of money you can save tax-free, the amount of money you're going to save after taxes. And you can do that. Just grab a copy of this spreadsheet, or you can use the online calculator that we built, and it's really cool. You don't have to do spreadsheet stuff. And you can figure out your number. And you can do that all on my website, rule1investing.com, absolutely free. I want you to go out there and see that there is hope. If you can replace ignorance with knowledge, you don't have to have a lot of money right now. So I want you to keep this in mind as you start to plan. So as always, now go play.